Let's talk some options positioning with Mr. Kevin Green joining us, looking at the levels as we head into the last 30 minutes here. Stocks seem like they could go either way at this point, KG. It's been a little back and forth. Any obvious bias in the levels and the options?
Well, what's taking place right now is basically short covering, which is why we saw that nice little bounce here, hitting off of that, once again, that negative gamma level that we've been focusing on, 5,500. We came in within around 3 points of that, and then we started seeing some short covering activity taking place. Now, if we're going to continue this move to the upside here, Oliver, the first area of resistance that we want to really highlight here is going to be 55.22. It's an odd number, but that's basically the 20-period moving average for the 5-minute or the 15-minute chart, and that has actually been a key moving average that we failed several different times, not only today, but also yesterday. So that's going to be a one to be able to kind of be mindful of. When you're looking at the open interest chart, though, from a technical standpoint, you are starting to see more longer dated hedge flows actually taking place here. Now, the first area that we are seeing that is going to be the 54.90 level, which is not too far away from the 5,500, that negative gamma area. But the one that I'm really kind of keeping my eye out on is 54.75. You're starting to see that type of positioning happening across the curve, pretty much out to the second week of October. And if that buildup is going to remain in place, that could actually overtake that 5,500 level that we've been really concerned about. And that just signifies that there's more downward pressure that's being put on this market for right now. I don't think we're out of the woods yet. We did have a little bit of a bright spot here today, but we failed it, unfortunately. And if the semis are not going to participate, the downward pressure, I think, remains intact until we get some economic data to really turn us around.
Okay. So at this point, we are holding on, trying not to fall too far, it seems like, with momentum really breaking yesterday.
Yeah, and actually we are starting to see a little bit more of a compression when it comes to those top side levels. Now, I still kept the 5650 area as the positive gamma area for resistance here, just because we have a lot of events that are coming up. So we could, turn around really quickly as well. But if you're kind of looking at the 5530, that's where I actually moved that down. That was originally at 5550, but you are starting to see a little bit more compression to the downside here, more hedges really taking place. Now, that could be a good thing, and that could be a bad thing. The bad thing is that it's going to really put a lot of resistance when you're trying to break up to the upside, getting out of this downtrend. The good point is that if we actually do break through on very large volume, kind of like we saw on Friday, if the stars align, then you could have a melt up scenario taking place. So downside compression for now, maybe a little bit more build up when it comes to the hedges past the 5,500 level, something you don't want to see if you're a bull in this market. But if you have that favorable scenario, that breakout to the upside could actually be very substantial. We just don't have that set up yet, but that's one thing to just keep in mind here as we try to see and identify a reversal pattern for this trend.
Seems like when we talk about these levels, and we've got some analogies, we talk about guardrails sometimes. The other one I kind of like are like tide pools, or like kind of like vortexes of gravity that kind of pull in a way, where it seems like that 5,500, like if you get through there, you might just kind of get swallowed by gravity a little bit.
Yeah, so if we actually pull up that volume chart, which is going to show today, and it's going to be on the 5-minute basis, you're exactly right. And really that pattern, that gravity level is 5,500. But actually, if you cross over 5,590, that's where you get the flush. So we have these levels that we can pin to, but when you kind of go over those levels and you create these downward selling events and you have a lot of volume that matches it, that's where you start having dealers starting to sell a lot more futures contracts in order to be able to hedge themselves. And it's not only just the dealers, it's the institutions, it's the retail traders that are out there as well. We always talk about the 0 DTE and how it's really created these low volatility markets and maybe has caused excessive melt-ups in the market. Well, the same thing can actually happen to the downside. And this is what we're in right now with this environment. But it's not just that 5,500 level. We get through that, we can maintain that. This 5,590 is where you get the massive flush. And that's where you get the stops being hit. That's when you get the algorithm saying, okay, we're in sell mode here. And that's when we see these massive sell-offs until we hit a new level. And that new level will be 54.75 if we do actually crack below 5,500.
Okay, so the point when the thrusters boost back in favor of bulls, that's like early Tuesday morning level, right? That's like where we were Friday afternoon, 55.90. So that feels far away at this point, 80 points. But, that's where we were at the beginning of the week right at the open.
Yeah, and it seems like it's far away, but actually, if you look at the VIX itself, this morning was basically pricing in an $80 or 80-point move either to the upside or downside. That was the implied move, around 1.4%. So we've been in markets where we've had more realized volatility than actually implied volatility, and so it does seem like it's far away. But if the market's really kind of pricing that in, and it's still going to have higher realized vol, you would just hope that that vol is going to be in your favor to the upside. So 80 points today actually would not have been a thing for this market. It actually was priced in that we were going to have a wide-ranging market. And so these levels look like they're far, but the market's really kind of pricing that in. That one, I get a little bit concerned when you start going out on the curve. We talked about the backwardation earlier this morning. When you start seeing hedges being put farther and farther out, and that backwardation is not as aggressive, basically that VIX curve is moving up pretty much simultaneously, that's when you are starting to see, okay, the market's really pricing in that this could be around, or this volatility can be around for another week or 2 weeks. Today is that type of action where you're starting to see not only just the front end or the spot VIX, but also front month and even some of the farther end months getting a little bit more love here. I hate sounding like a bear, Oliver, but the technicals kind of signify that we may have, we might have some more room to the downside here. You're hoping for a rebound. But a flush like today is something that technicians just don't like. And if we continue to close near the lows of these days, that's not going to be a good sign for us. And we could see further downside movement if the economic data allows us to do so.
That's a very good point about closing at the lows, because yesterday that was really significant. We hadn't seen one of those in a while. It's usually been a fight, if not a ramp into the close. And S&Ps are basically there. The Nasdaq's up off the lows of the day still. We had a nice, decent little comeback. But Nvidia's fading back too. So to your point about ending, at the bottom, that's pretty much kind of what we're heading for if something doesn't change in the next 20 minutes. So we hope that we don't then break through and get that vortex drag below 5,500. Nothing wrong with sounding like a bear. The numbers are the numbers. The trends are the trends. And also just fundamentally, I mean, our big rally today came on the back of jolts down to like 7 million. That's not good. So, lesson learned.
But the liquidity is there. Let me just highlight here real quick. The liquidity is still there, though.
No, that's
so
good.
if we start seeing liquidity kind of falling off the map, that's where bears will be in full control there. But if you still have liquidity in this market and we still are just kind of selling off and just grinding to the downside, once again, I say that's mechanical in nature. You still see the defensive sectors like utility still catching a bid here today. This is not a sell everything type of sell-off right now. But if that liquidity kind of drops back to the downside, now we had a holiday, shortened week. We had something that occurred on Friday, but the liquidity is still pretty good. You start seeing that thing start to turn to the downside here, and you're starting to sit at 25 contracts on the bid, 25 contracts on the ask, which is fairly thin, and you start seeing these sell-offs. That's where you had these massive gaps, and that's where these gamma levels really do have a really big, a lot bigger impact to them. We're not there yet. We're like 60% bearish right now, and then 40% of it saying, okay, this is not as bad as maybe the price action's telling you.
Fair enough. All right. Sprinkle in a little fundamental economic stuff. I think that number goes up to like 70, but totally, I got you. Just purely based on the technicals and what we're seeing for the flows. I like the point about liquidity because it seems like you can imagine a scenario where 55, that breaking point, you get below it, liquidity starts to get strained a little bit, things get a little bit nastier. But for now, this could just, be a little bit of a churn before a big, big number. Thanks, KG. Great stuff. Good analysis.